It is Monday, November 17th, and it was a bit of a rocky day, a red day in the markets today. The indices were down, and this video is about how I approach trading on a day like today. So, first of all, if we take a look at let's look at the NASDAQ, because I'm going to focus in on tech, and I'm going to focus in on the S&P 500 in this video. So, you can see today that the NASDAQ opened up. It shot up here around the 945 to 950 time frame, and then it started to drop, and then it consolidated again and dropped. Then this was at 11:15. It then popped up around just before noon, and then started a decline for the rest of the day. So a bit of a head and shoulders pattern here in what developed during the day. And what you probably want to look at is when the market pops and gets up into the 945 time frame, you probably want to look at exiting some positions that are profitable and then waiting to see what the market does. And today it would have corrected downwards. It then would have had these small little spikes, and normally in a consolidation like this, it will indicate the market is going to continue downwards. So then it found a bottom, and it found a bottom very close to its open bottom, or where it opened at. So the bottom was a little lower, but only slightly. And then it spiked again and then continued its decline. If we take a look at the S&P 500, the S&P 500 just started a decline at or around the 12:30 time frame. It was low to begin with. In the early morning session. So here, 10:20 a.m., it did pop at the open, but not that much. And then it started to consolidate and it moved down. It finally found a bottom initially here at just under 7,000. And then it popped up, but it wasn't doing anything extreme. And then after the 12:42 time frame, it just continued its decline downwards until it bottomed out around 3 p.m. and then started to make a small comeback. So I would have looked at the S&P 500 today and then looked at financial stocks in particular, because I'm a fan of the financials right now. There'll be one of the first to release earnings in January, and taking a look at whether those stocks followed the index. And you'll see that a lot of them did exactly what the index was doing. So you'd want to wait for a bottom here, which you would have found around the 2:30 kind of time frame here, or 3 o'clock time frame in Goldman, and made an initial purchase. When you saw it starting to tick up, you could have continued to buy in or waited for a pullback, which it did again and dropped down to 772, and then you would have had a bit of a gain towards the end of the day that you could have sold out. But I believe that Goldman will probably pop to the tune of $20 from where it is at close today as we go into the remainder of the week. Good luck with your trades. I hope this helped to clarify kind of how I approach things. And if you have any questions, let me know in the comments.